righty, and we are live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic. I made it my mission to help you guys own it, and maybe you guys can help me own it as well. What a crazy day. The markets are nice and green. There's a lot of explanations as to why, but I think that this is definitely just a potential bounce from yesterday. Yesterday was a wild day as well. There really isn't a whole lot that you can pinpoint as to why the market's moving today. It could just be that there's a lot that's been baked in, and that tax season is officially over. So there's potentially people buying back in the markets because of that. So there's a multitude of reasons as to why we could see things looking up today, and some things that we can point out. But, we have an exciting day today, and I'm super pumped. We have Netflix and IBM that are going to be reporting after hours. We do have Interactive Brokers as well. It's going to be reporting. And then we got some exciting ones tomorrow. So I hope that you guys will like, subscribe, and hit that notification bell to get notified when I go live, as I'll be giving those reactions to Tesla, among others, tomorrow as well. It's going to be I'm super pumped for Tesla. I think everybody is. I can't wait for this one. So, again, hit that notification bell to get notified when I go live at 3:45 p.m. tomorrow to give my live reactions to that. Guys, today's show is brought to you by ownthechaos.com and the Chaos Crew, or you can hit the join button next to subscribe. If you do that, you can get access to my watch list that I put out every single day before the market opens. I put up 5 stocks, and guys, Lululemon was one that I've been putting on the watch list over the last couple of weeks, and it has been absolutely on fire. I cannot stress enough just how awesome Lululemon has been. I mean, we've had some really good trades here, really good picks on the watch list. Lululemon is definitely one of them. I'd mentioned on the watch list, and everybody who's in the Chaos Crew, anybody you see a bull or a bear next to the name can attest to this. Lululemon has been on this watch list, and I've been pointing out this cup and handle pattern and how bullish I have been on the stock. Their earnings were fantastic. There's a lot to like about Lulu. They just got upgraded today to $495 per share. That's a long ways to go from here, and I think that Lululemon definitely is poised for the breakout. So this was a great one. Congrats to those of you who took part in this, who are in the Chaos Crew and saw this along with myself. I'm super pumped for that. Okay. Before we get into anything else, just of course, I want to get into the starting 5. Let me shout you guys out. The starting 5 for today is none other than housekeeping: John Gosson, Ralph Endenhook, Chris Topher, and Eric Brand. You guys are our starting 5. And if you guys didn't make the starting 5, it could be because you didn't hit that notification bell. So make sure you're doing that today. All right. So D Karma, I'm going to have to ask you to stop spamming the chat. Everybody gets it, okay? If you don't, then I'm going to have to put you in timeout. And I really don't want to do that. We get it. We get it. Netflix reports earnings today, and it's going to be interesting. Average estimated earnings per share is at $2.90. The revenue is around $7.93 billion. I'm trying to talk too fast. But the average estimate is $2.90, and then the revenue comes in at $7.93 billion. The interesting part about this, right? Netflix is down 40% over the last year. Looking at the expectations here, we always know that Netflix, nobody cares about. I don't want to say nobody cares, but for the most part, nobody cares about what they're coming in for earnings. Nobody cares about what revenue they're bringing in. They care about subscriber growth. And that's been one of the really tough parts about Netflix as of late. 13 out of the last 15 quarters, Netflix has traded down after earnings, which is crazy. I would imagine there's probably a healthy amount of people that are short on Netflix going into these earnings. So make sure you're keeping an eye on that. Now, could this be a counter trade, for example, if there's a lot of people that are expecting bad news, and that, I'm not the only one that's privy to this information. Of the last 13 quarters, or out of the last 15 quarters, 13 of them ended in red days after earnings. I think that that's certainly worth taking a look at. And I think that you can make the argument that a lot of people may be thinking, maybe I should be bearish on Netflix. And I think that there is some reasons to be bearish on Netflix. We talked about this a little bit yesterday. Expectations for Netflix is 2.5 million subscribers for the first quarter, which would mark the least since the second quarter of 2021. Netflix was such a huge benefactor of the pandemic, and it just exploded, right? And I think that this is in a period right now where even the growth isn't going to be there like it was back during the pandemic. And Netflix's total subscribers just under 225 million. And so I think, I don't know. It's hard to determine what you should be here. And I don't, and the conclusion that I came to was that I don't want to be long or short on Netflix. And I think, yes, Savvy Money Show, I appreciate this. But I think, like I said, I don't want to be long or short on Netflix. There's the biggest reason. Not only is it because the pandemic is essentially come to an end, and that there isn't so much demand for something like Netflix because people aren't at home at home as much. You're seeing more people getting out and experiencing things and not really attached to their streaming services. But on that note, there has been an extreme amount of competition coming in because of the pandemic as well. We have HBO Max, Apple TV or Apple Plus, Disney Plus, Prime, Paramount, Peacock, you name it, even YouTube TV. And a lot of these have really come with amazing original content from all of those companies that I just listed. I can name you one really great show that you must go see. So the competition is fierce. Also, most of those other platforms have gotten into some form of fashion of live sports, with the exception of maybe one or two. Netflix has yet to have done that. Instead, they've leaned into the gaming side of things. And I guess it remains to be seen as to whether or not that will pan out for them. But I think that there is something to be said for the fact that everybody else is leaning into sports, which is a huge market, by the way. And there probably is some room for Netflix on there, but they're deciding to go this route, and it could give them the competitive edge. If they pull this off, if they execute the gaming side of the business rather well, then I think that Netflix is investable again. I just don't know if like I said, if I want to be long or short on Netflix. I got to say, I'm not optimistic for them. But having said that, there is some potential for, the bar being set very low, and they could come in above expectations, and maybe we see a bit of a different reaction than many of us are expecting. So I think that that's also something to consider as well. Timo, yeah, this is kind of where I'm at. Sentiment is so negative. Netflix might very well go up. Same thing as Amazon last quarter. Yeah, and that's kind of where I'm at. But that's kind of why I'm like, you know what? In situations like this, it's like I don't want to be long or short, because if I'm long on Netflix right now and they do actually shit the bed like everybody's expecting, it's going to get hammered, right? It's just going to get smashed. I think I could see it coming down to $2.50 per share. Let me show you what I'm talking about. So $2.50 per share would bring Netflix down to levels we hadn't seen since 2019. Here's $2.50. And this is really technically the next area of support that I could see Netflix coming down to if they shit the bed today. Stock's up 3.25 today. And while it's a great day, I think that, I don't know. Like I said, I don't want to be long or short on this. I like Netflix. I love the platform. They have amazing shows. They have amazing content. But not only are they competing with other streaming services, but they're also competing with people wanting to be out and not really attached to their streaming device, whatever that might be, right? TV, phone, what have you. So I just don't know. It's not just that Netflix is competing with other companies. They're also competing with just people wanting to be out and not tied to their screen. They're out doing things and experiencing things. And, the summer's coming around. So I doubt that we see much growth there. So I just think that Netflix is in a really scary spot right now, but remains to be seen. I mean, I'm sure we'll see some exciting movement here after hours regardless. And Timo, I agree. Guidance will be important. If they have a solution to counter password sharing, this could swing things. That's a really good point. We haven't talked about that a whole lot as far as the password sharing part of the business and how that's kind of really gotten a little bit out of hand. They made mention of piloting some software that would prevent you from sharing your your password, and maybe that helps increase subscriber growth. I'm not sure, but that's certainly something to consider as well. Well, there you have it. The stock's at 348. We'll call it 348 right now. Going into the close, we got about 5 minutes before the close takes place. But then we also have IBM. IBM has earnings today as well. Pull that chart up. And this is going to be a great play, I think, regardless of what happens today. I don't think it's going to be a bad day at all. The stock's up 2.33%. Looks like we're going to close over the 50-day moving average, which will be nice. The estimates here is $1.38 per share is what their expectation is, and $13.85 billion in revenue for the quarter. That's going to be a great quarter for them. There's a lot of things going right for IBM. One of them being that they have launched a new generation of mainframe computers this month, which would drive it in its hardware business. The business is positioned to outperform for the rest of the year, I think. Looking at some of these, some of the growth that we could potentially see from IBM. International Business Machines is what IBM stands for, by the way, in case you were wondering. And so this is going to be interesting as well. Give me your thoughts on this. Do you guys think IBM actually beats earnings? What are your thoughts on IBM? Have you even taken a look at this thing in the last 10 years? Be pretty dormant, but I think we're going to start seeing this wake back up. They got a new CEO. They have a new lease on life, so to speak. And it's also actually a really good defensive play. Old tech sometimes can be that for people who are worried about recessions and interest rates going up and inflation. It's a good one to kind of rotate into, but it's also still growing at a pretty decent clip. I mean, $13.5 billion in the first quarter is nothing to turn your nose at, for sure. So I think IBM could come in here and do really well. I'm actually looking forward to these earnings, and I think that this will be an exciting one to watch as well. Big iron machines. Yes, Jeff Bonica for sure. But then there's also interactive brokers, and this will kind of set the tone for some of the other brokerages. 82 cents a share is the expectation here. $696 million. So not anywhere near the type of revenue that we saw with IBM, or the expectations for IBM or Netflix, of course. So the smaller one of the three that I think kind of bring on the headline for today's earnings. And so I don't know. I think that this is certainly one to watch for. We heard from some of the bigger banks like Goldman Sachs and JP Morgan and Morgan Stanley about trading activity being down. So it'll be interested to see how Interactive Brokers fares in this. You know, the bigger banks that report on trading activity are more so institutional, right? Rather than retail trading taking place. So how much has retail died off? And I can just tell you from a personal standpoint that I think that this is probably going to be in a bit of turmoil. Just because if I'm just looking at my own channel and some of my peers that are on YouTube, the interest has died off significantly. You know, I'm not getting anywhere near the type of views that I was getting, let's just say a year ago or even 18 months ago. And you can go across the board, and that goes all the way up to the top, right? The big four, big meat Kevin and Graham Stephan, all those guys, their views are also down significantly. And so I wonder if this translates into the brokerage firms, especially in retail, and how have they been able to overcome that if that is the issue, right? You're also dealing with salary, increases, and so there's increases to the bottom line, or impacts the bottom line. So I think that's interesting. I'd be curious to see if any other analyst actually has looked at this to try to determine their own due diligence, right? This is kind of a tidbit of due diligence that maybe you're not going to hear from some of the analysts that are analysts of institutions talking about activity that is being taken on YouTube, right? So Snookeroo says everybody's at the beach here. Yeah. Hey, listen, I'll trade at the beach. I've traded at the beach before. I'm fine with that. Savvy Money Show says, I think if Buffett's into IBM, how long before he goes back into Intel? He held until 2012 and understands it better. Maybe. Pastor David Hopper wants to buy Netflix so bad right now. When everyone's so negative, it kills expectations and could go off today. Yeah, I mean, that seems to be, I keep hearing that in many areas. And so that's going to be interesting to watch. So here's the 5-minute chart. I'm going to bring us out. We're going to keep the 5-minute chart pulled up. I think Netflix usually releases their earnings right away, so we should hear something from them. So John says, any chance you can increase the quality of the screen? The quality of my screen should be fine. Usually what I've found is that you have to change the quality settings on your own device, especially if you're on a phone. And down goes Netflix. Stock's down 12%. You can't even see it on the screen anymore. Look at this. It's off the screen, literally off the chart. Look how big this candle is. Holy hell. So there's Netflix. Let me see if I can come back and see if it makes a difference here. There we go. So pretty big drop off on Netflix. Stock's now down below $300 a share. Holy shit. Getting smoked is right. Lost one. As soon as those numbers come out, I'll have them for you, but obviously it looks like they are out now. Wow. Netflix getting absolutely crushed. Goodbye. They actually beat earnings at $3.53 compared to the $2.90 expectation. So they actually smashed earnings per share. But as I've said before, you know, that doesn't always matter, especially with Netflix. And we're looking for subscriber growth. But absolutely getting murdered right now. It's down 19%. I can't even keep up with how fast this is dropping. Unbelievable. I think I'm seeing some reports here that revenue has actually missed expectations. So they came in at $3.53 per share compared to the $2.90 estimate. Am I reading this right? It looks as if they came in at a subscription loss. Forecasted $2 million loss in Q2. Holy shit. That is bad. Company reported quarterly sales of $7.87 billion, which missed the analyst consensus of $7.93 billion. So that is a miss on revenue. They missed by 7%, 8% on that. Ouch. That is bad. That's real bad, guys. Jeff Panicka, I would not touch Netflix with a 10-foot pole, my man. Buy at your own risk. 700,000 subscriber loss in Russia. Yes. But analysts were expecting this to kind of be built in already. The subscriber growth of 2.5 million, they were taking the Russian loss into account. If you guys recall that Netflix had banned Russian subscribers, I believe, Russian users. So obviously that was going to be an impact, but damn. Stock's trying to recover a little bit after being down pretty much 20%. Stock is now only down around 15. Interesting. All right. Let's see here. I want to get the actual numbers for you. So you guys are just tuning in. Netflix came in and smashed earnings expectations on earnings per share, but global streaming paid net additions of 200,000 lost, and they missed on revenue. They missed on subscriber count, and they actually lowered their guidance for subscriber growth, missing by 2 million subscribers. So again, earnings per share, $3.53 versus $2.92 estimate, 7.87 billion actual versus the 7.93 estimate. So missing on revenue, and the guidance is absolutely horrible. If you guys recall, I've mentioned at the top of the show when I was talking about Netflix that I could see this going down to 250 if they came in and shit the bed. That is probably happening. So let's see here. This is the daily chart. 329 was the previous bottom for this. This is now below $300 a share. And the previous low to that was 290, and it is below that. So the next stop on this, in my opinion, is those 2019 numbers of 250. So that's where I could see Netflix coming to. Will it? I think it's anybody's guess, but my educated guess is that, yes, 250 is probably in the cards for Netflix. Guys, remember when Bill Ackman bought $1 billion worth of Netflix after last quarter? Remember this? Remember when it gapped down last quarter and Bill Ackman came in and tried to save the day? He bought $1 billion worth of Netflix and the stock went up. That $1 billion is now down by 250 million. No big deal, Bill. Sorry, that sucks to suck. Jeez. Unbelievable. Pastor David Hopper said this is taking down Disney. Is it really? Let's take a look. I wonder if it's taking down some of the other streaming services as well. Yeah, Disney's down 3.5. Obviously not anywhere near 20% down. Oh, shoot. What's Paramount's? Just had a brain fart on there. It'll come to me. But yeah, that's pretty tough. Disney's getting crushed as well. So 166 of you guys in here. If you haven't hit the subscribe button or the like already, I certainly would appreciate that. If you guys are just tuning in, Netflix came in, they beat earnings per share. That's the only good thing about Netflix's earnings. They came in and gave guidance that came in 2 million subscribers lower than what expectations would be. So they're coming in negative on subscriber growth, which is pretty rough. Now, obviously, you can, of course, make the assumption that a lot of that has to do with the Russia situation and the ban they have over there, but it's really not. That's not the real story here. The real story is that they are experiencing slowing of growth, and it's actually going in the other direction. That is rough. That's not going to be good, and I expect Netflix to hit around 250 per share. I think that's probably where it could potentially bottom out. Thank you, Viacom. Is it Para? Yeah, it used to be Viacom. But now it's down. So this is Paramount Global, CBS, Paramount Streaming Services. That's also getting smacked a little bit. It's only down 1 1/3, so no big deal there. But some of the other streaming services are feeling the pain here as a result of what Netflix is doing. And it looks as if the overall market's red now, reacting to this. And if you guys recall, last quarter, this is exactly what happened. Netflix got crushed last quarter, and the whole market had a shitty day the next day. So I expect that the market's not going to do well tomorrow because of this. I hope I'm wrong, but if history repeats itself, last time Netflix had a 20% decline in one day, one of the worst days it had in probably about a decade, and the whole market responded to that. So I imagine, and then we're kind of seeing this after hours, right? I'm looking at Tesla down 0.5%, Google's down nearly 1%, Amazon is down 1%. The whole market's responding to this. Meta Platforms, aka Facebook's down 1%. Nvidia is down. After an amazing day today, Netflix is causing a lot of tech to really kind of sell off here. Airbnb's down 1.25%. I mean, there's a lot that's selling off here. It's not just streaming, guys. Everything seems to be selling off as a result of Netflix earnings. And I think this is actually potentially going to be an opportunity, not for Netflix, but for some of these other stocks, because some of these other stocks should not be lumped in with Netflix. And I'll be honest with you, I think that Netflix should no longer be lumped into some of the bigger tech names like FANG or Netflix shouldn't be compared to Amazon or Apple or Microsoft. It's just not anywhere near the same company, right? And so I think that there's definitely needs to be a new acronym. We're probably going to retire the FANG name here for in a short while. And the stock is now still selling off. It's down 21%. There is another company, a couple other companies out there reporting earnings. IBM is also reporting earnings today. That stock is actually up right now. We'll come back to the Netflix story, and I know that's a big one, guys. But IBM is actually in the green. So pretty much what my expectations were for both of these stocks seems to be coming through. I told you guys I didn't want to be long or short on Netflix, and so I wasn't, and obviously that paid off because I just didn't want to be a part of that. IBM came in and actually looks like they might have missed earnings per share, $1.40 compared to $1.41, so just barely. But they came in and beat on revenue, $14.2 billion compared to the $13.81 billion expected. That's a huge beat, almost a $500 million beat on revenue. And the stock is up here now, shot up to 4%, 4 or 5%. It's now only up around 2%. As soon as I get some more on guidance, here we go. Software revenue is 5.77 billion. Estimate was at 5.7, so they even beat on software. That's pretty good. They see year revenue growth at high end of mid-single digit range. I don't know what the expectation was for that guidance, but it seems as if it's being received pretty well. Stocks up, still looking pretty good here so far. That is the IBM numbers. For those of you who were interested. All right. Netflix should be replaced with NVIDIA. I like that. I agree. I see some of the other guys in here cracking me up. And then we also have Interactive Brokers, which I thought I saw Raylan put in here. Yep, she did. Okay, let's see. Let's look at Interactive Brokers as well. IBM is still climbing up here. That's pretty good. Interactive Brokers came in, and they came in line. The revenue missed estimates. And again, I'd be curious to hear about what the trading activity is like for Interactive Brokers. So this doesn't surprise me either that they missed on earnings and they came in line on earnings and missed on revenue. That's not really a big shock to me. Michael Hanna, the guidance of Netflix was not good. Their expectation on growth was a 2 million subscriber miss on expectations. Stock is still getting absolutely crushed here and is down 22% after hours. Like I said, 250 is coming for Netflix. That's my expectation on there. I always found it crazy that Microsoft wasn't in the FANG name either. Honestly, like, why would you put Netflix in there over Microsoft? That's some Jim Cramer bullshit. Like Jim Cramer left Microsoft out of FANG completely. It never made any sense to me why they would put Netflix. He would put Netflix in there over Microsoft. But I mean, look, there's got to be an acronym for Facebook, which now is Meta. I think you could still use the F, right? Because they haven't changed their ticker. So let's just keep the F for Facebook. Apple, Amazon, Microsoft, Google, and then there should be room in there for Tesla, I feel like. Tesla, NVIDIA. I think those are the ones that could be in some sort of big tech acronym. Can IBM move markets instead of Netflix, please? Yeah, that's the other part I don't understand. Like, Netflix is going to be moving the market like this. It's just kind of wild to me. Stock's still selling off. If you guys are just tuning in, it's about 185 of you guys hanging in here. I would encourage you guys to hit the subscribe button. I do these earnings reactions every time they come out. So be sure to subscribe, hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday. Would love to have you guys here with me. I also go live on Sundays to kind of give you a snapshot of what I think the expectations are for the week ahead. For Stock Watch Sunday, that's at 7:30 p.m. Eastern time. If you guys want to be a part of that, make sure you hit the subscribe button, that notification bell. Would love to have you guys hang out with me every day. Also hit that like button. I certainly would appreciate that. How many likes do we have in the house? Got 46. We can do better than that, people. We can get to 100. I think we can. Hit that thumbs up. I certainly would appreciate it. There's some of these acronyms in here. I knew I opened up Pandora's box asking for acronyms. I was watching Tom Lee and he said stay away from the stay-at-home stocks. He might be right. He is right. And he's right a lot. So I definitely am a big fan of Tom Lee. Would have been the best trade of my entire life if it was Netflix closing rather than Tesla. Yeah. No kidding. I like Mama. Yeah, or like there's Magma. We could do Magma. I like Magma. I think Magma is better. Musica 1. Thank you. Appreciate the like and subscribe. Like Liquid Magma. Magma is a good one. Look at this. Netflix is still selling off, guys. It is bad. It is bad. All right. Let me see if I can find some other tidbits information here. And if Netflix is back to 2019 in terms of price, but in terms of comparative earnings revenue, it's not any comparison. It's a loss of 23 cents makes that PE now somewhere around 22. Seems a little bit crazy, according to somebody here on Twitter. What was their PE going into today's earnings? PE was at 31 times. So yeah, that's still expensive, especially when you compare it to something like Meta, right? Meta Platforms or Facebook is at like a 17 forward PE, 17 times next year's earnings. That's the cheapest of the big tech names, and I think that it doesn't deserve to be down here. I still think that Facebook is an excellent buy where it's at. This is where, and look at this. This is also getting dragged down with Netflix. God damn it, Netflix. What is shitting everybody's Cheerios after a really solid day? Netflix is ruining it. But you know what's going to happen tomorrow? Tesla's going to come out with earnings, and it's going to take the market the other direction. I'm convinced of that. I'm actually really pumped for tomorrow for Netflix or for Tesla's earnings tomorrow. I think that that's going to be really exciting, and it could turn some things around. Johnny Vu, yes. So if you guys are just tuning in, Netflix did beat earnings per share, and they actually beat them pretty handily. They missed on everything else, though. Like, they really shit the bed. They missed on revenue, then they missed on subscribers, and then the guidance they gave on subscriber growth was well below what the expectations were. And so that is why Netflix is selling off so badly right now. It's down 22.5%, almost 23%. If you guys didn't catch me at the top of the show, I had said that if Netflix shits the bed like this, that 250 is probably the next stop for this. I got that from its 2019 numbers. And so this is where it was at in 2019, is at 250. And you can see on the chart that there isn't a whole lot of support taking it all the way down to 250. If it breaks 250, watch the hell out. Let's go to the weekly chart, and I can kind of show you where that could take us to. So 250 is right here. This is where we saw it in September of 2019. We saw it again in January of 2019, and then one more time in February of 2018. If it breaks 250, watch this get smashed down into the 180s. That would be crazy. That would be absolutely bananas. If that happens, then I will be a buyer of Netflix. I still don't think that I'm a buyer of Netflix at 250, to be honest with you. I think that if it breaks below 250, it's probably going to get ugly, and it may come down to the 200 to 180 mark. And that's probably when I'll be like, okay, let's slow everybody's roll. I think that Netflix is finally a buy, but I'm not touching it now. Not a chance in hell. You might see a dead cat bounce or something in here, but look at what we saw last quarter when they came in and shit the bed. The only thing that saved Netflix, the only reason this popped up, right? This was last quarter. Huge gap down. It was down around 20% in one day. This is where it opened up last time they reported earnings, and the guidance was quite bleak. And I would argue that the guidance this time around is even bleaker than last time around. So you can see the move down here. The only reason this popped up was because Bill Ackman bought $1 billion worth of Netflix a couple days after their earnings, and that's why it moved up. And then what happened after that, right? It continued to sell off. It got uglier and uglier, and now it's absolutely atrocious. There's no part of me that wants anything to do with Netflix at this point, just given how bad this has reacted. I don't see a solid bounce back from here. There is nothing in that report that gets me excited about Netflix and holding on to it in the future, right? Like, there's got to be something that changes the narrative on Netflix. And this isn't me being a hater. This is just the unfortunate truth. Like, what's the bull case for Netflix right now? They literally just laid it out for you. They missed on revenue. They gave you really bad guidance, especially on the subscriber growth front. Missing 2 million subscribers compared to what the expectation was. That is awful. They lost 200,000 global subscribers in the first quarter and expects to lose 2 million more this spring. Let me repeat that again. Netflix lost 200,000 global subscribers and expect to lose 2 million more this spring. Now, some of this has to do with them banning Russian subscribers, but that's not anywhere near the big problem. And I think that everybody knows this. Yeah, I 100% agree. Jonathan Schreiber says, until Netflix pivots or does something completely different and popular than their competitors, it'll continue to get crushed. 100 with you, 100% with you on that. Oh, is Roku taking a shit too because of this? Yeah, stock's down 6%. Holy cow. Let's take a look at the 5-minute. Yeah, look at that. That's trying to make a little bit of a bounce, but this is Roku as well. Let's check back in with Disney. The overall market, by the way, guys, is reacting to this news. Somehow Airbnb got lumped in with Netflix. Figure that out. This is why I think there's buying opportunities here. The Netflix story to me, let me come back here to you guys so you guys can see my beautiful face so I can explain this to you. To me, like the overall market is selling off as a result of the Netflix news right here. The stock is now down. Let me get back to that. Stock is now down. Come on, 23% on slowing of growth. Many investors, and you're probably going to see some headlines here, are going to equate this to the overall market. Like this is the beginning of the end. Everybody's going to be slow. Sell all of your tech and be done with it. And I think that that is the absolute wrong way to go about doing it. Netflix to me is the outlier, right? We're seeing ridiculously strong demand as far as consumer spending is concerned. There's $15 trillion on the sidelines in the hands of consumers. And wages are going up still. Yes, inflation is going to be a problem, but there's arguments that can be made that perhaps we saw the peak of that in March. And so I think that when we look at Netflix, it's not telling us the whole picture. I think that you look at travel right now, right? I mean, Ed Bastian, CEO of Delta, came out with earnings last week and talked to you guys about how they're seeing record demand in air travel right now. Record demand over the last 5 weeks for Delta. So I think there are bull markets here, little pockets here that you could scoop up some shares into. I really like travel right now. I love energy. Those aren't anywhere. That's not, Netflix isn't going to tell their story. And the reaction that we're seeing across the market is just kind of nonsense to me. Like you're going to sell Tesla because Netflix shit the bed. I mean, give me a break. The story with Netflix and the streaming services in general has nothing to do with the overall market. So I think that there's opportunities here as we're seeing a lot of this stuff sell off. You think Alphabet is going to suffer the same fate as Netflix? I mean, are you fucking kidding me? No, absolutely not. Absolutely not. Apple the same way. Apple's going to be fine. Alphabet's going to be fine. Facebook will be fine. Netflix will not be fine. Period. And that's all I got to say about that. All this is a great sign that inflation is going down. Well, that's an interesting take. That's an interesting take. Okay, so today, obviously, Netflix is taking up all the headlines here because of just how badly they are doing right now. But IBM actually came in with earnings, and the stock is doing quite well. They missed slightly on earnings per share. They came in at $1.40. The expectation was $1.41, but they absolutely blew it out of the park with revenue and came in $500 million higher than expectations on revenue. They didn't raise their guidance. They reaffirmed that their guidance was going to be good for the rest of the year. And so IBM obviously being rewarded for that. Then Interactive Brokers came in and they came in line on earnings per share. They missed on revenue, and the guidance remained the same as well. So no reaction there. The stock's flat. Those are the big earnings for today. Obviously, Netflix is the big talk of the town. Let me know your guys' thoughts on this. I'm going to check in to see what you guys are chatting about, what your thoughts are. Adrian says, Adrian, sorry, not Andre. Adrian says, buying a random biogenetic stock would do better than Netflix in 2022. Yeah, no shit. Hey, Willis, what's up, my man? Appreciate the donation. He says, my 280 puts and 260 puts are swollen on Netflix. Hell yeah, bro. Congrats on that great trade. Thanks, Nukaru. Appreciate you as well, my man. Jonathan Shriver says, how the fuck is Disney not doing anything yet? I don't get it. Parks are open. They're in a shit ton of companies. Why is the stock so stagnant? That has a lot to do with the politics swirling around Disney right now. Disney hasn't been doing well because of that. So it's been, it's been pretty tough. Right. PG, Procter Gamble, they don't have earnings today. Procter and Gamble is tomorrow, I believe. Let me double check that for you. Procter Gamble does have earnings this week, but I think it's tomorrow. They were this morning, but I don't think they were. Let me double check. Yeah, tomorrow pre-market we have Procter Gamble, ASML, which will be very interesting in the semiconductor space. Abbott Labs, Anthem, all tomorrow morning. M&T Bank. Those are all going to be interesting ones. Okay. M. Nice is asking about tomorrow for PG. I actually think that Procter Gamble should do well. You know, they've done extremely well over the pandemic because of obviously people needing at-home products because they're stuck at home. So there's extra demand there. And the stock is very interesting here. Earnings are going to be very telling as far as the stock is concerned. This is another one of those where I'm not quite sure that I would want to be bullish or bearish on this. I don't think I'd want to be short or long. I think I just would rather watch it and see where it goes. If I miss an opportunity on a potential breakup for Procter & Gamble, then so be it. But I don't know if I'm really excited about owning it at this point, either long or short. So I think that I would just be careful with Procter & Gamble. I do have some expectations for you on them. Again, they're going to be tomorrow morning. They expect the earnings per share is $1.25. Revenue is supposed to come in at $18.73 billion. And the big key here is going to be, have they been able to pass along price increases without threatening the sales expansion here? In other words, you know, has inflation hit Procter & Gamble so hard that they haven't been able to pass on the costs along to the consumer? That'll be something that we'll have to see if that gets answered tomorrow. And earnings growth actually slowed to just 2% in the previous quarter compared to the 18% a year earlier. So this is a clear pandemic winner, and I'm not sure it's going to be a post-pandemic winner. And that's what we're going to have to wait and see about tomorrow. So that's kind of something that I'm a little bit unsure of as far as Procter & Gamble is concerned tomorrow. So Alberto says Procter & Gamble's PE is outrageous. 4P's at 27. That is outrageous for a consumer staple. Alberto, I agree with you. I agree with you on that. It is expensive. So I think that I probably would not be touching Procter & Gamble right now, just because I don't know if the risk reward is worth it. Okay. What else we got? YouTube revenue was more than Netflix last quarter, and they keep growing users. The streaming business model is changing. The content creators are taking over. Absolutely. I absolutely agree with that. I love YouTube. You know, none of these streaming services are perfect, and you can't find a perfect one. You just can't. But I tell you what, I mean, YouTube, you have to work your ass off to go anywhere with it. It's not just a platform where you can kind of just create content and hope to float by. That is not what YouTube is. I love being a YouTube creator. It's absolutely my favorite thing to do, is just be on here with you guys every day and chatting about stocks, and I get paid for it. That's the best part. Like, I get paid to do shit that I love, but I've worked my ass off to get here, and I'm still not where I would love to be. But it's an amazing platform, regardless of some of the issues that people complain about. There's things that I complain about YouTube all the time. I mean, the things that I get demonetized for make me scratch my head all the time. And the guidelines are so vague that it's just like, what am I supposed to do with this? Right. But the platform itself, the content, and the things that it's afforded me to be able to do are absolutely amazing. And that's where I think that Netflix should do something like that. And Netflix should get it. I guess hindsight's 2020, right? Should they have gotten into sports, or should they get into sports like some of the other ones? Perhaps. I think that they could be on to something with gaming, but they really got to execute very well on that. I mean, it's not like it's not a competitive space, right? So I don't know, guys. I mean, Netflix, if you're just tuning in, Netflix really shit the bed, and it's bringing down the rest of the market. Like I said, stock came in. They actually beat on earnings per share. Let's take a look at the chart one more time. They actually beat on earnings per share, but that's about as far as it goes as far as the good news is concerned. They missed on revenue. They came in at a loss on subscribers of 200,000 for the first quarter, and they expect to lose another 2 million in the second quarter. They expect to lose 2 million subscribers in the second quarter. That is wild. Stock's down 23%. And I think that it is entirely possible that we come down to test 250 on Netflix, which is a number that we haven't seen since 2019. Thanks, Alberto. Man. All right. Jimmy Bieri says, I hope you guys expect a Netflix drop. Earnings will be poor all around. Sell the goddamn rips. Jimmy, I expect you to be here tomorrow. If Tesla crushes earnings, I need you to do something for me. It's going to be something embarrassing, like how much you love me. Because I could not disagree more. I mean, did you not see Lululemon's earnings a couple of weeks ago? Did you not see Delta's earnings? What are we talking about, my friend? The financials were actually pretty damn good as well. Tesla to the moon. Tesla. Mark this, guys. I'm marking this because I'm not deleting this recording. Jimmy Bieri, I'll hold you to this. Tesla will drop to under 750. I will hold you to this. Okay? Come back tomorrow. I'll see you at 3:45. Johnny Vu says Tesla to the moon tomorrow. A big if for Tesla. Yes, potentially. Mass mandates being cast out everywhere now, including Uber drivers and riders. Ooh, that could be good for Uber. Not that I still don't like Uber. They can't sell their way out of a paper bag. They can't make profit to save themselves. All right. I agree with that. Tesla, no matter what, is a good long-term play. Speaking of Tesla, tomorrow we do have earnings after hours, and I'm super excited about this, guys. I already mentioned to you that tomorrow morning we have P&G or Procter & Gamble, ASML, which is it's going to be a key earnings report for the semiconductors, guys. That's going to impact NVIDIA, AMD, Intel, you name it. Any other of the semiconductors, the chip makers specifically, are going to be impacted by ASML's earnings and what they have to say as far as supply chains are concerned and the shortages. So ASML is going to be a really key stock to watch tomorrow. Let's take a look at that stock real quick. That is pre-market. And then tomorrow afternoon, we have Tesla, of course. Alcoa, which is a materials play. It's aluminum play. That's going to be a really important one to watch as well. There's United Airlines that reports tomorrow. CSX Trains, which that's going to be an important one. And then Whirlpool as well. There's a couple of other ones, Crown Castle being one of them that probably some of you guys might have your eye on or you might be in. So that's going to be something that we're going to have to watch and wait for. And I'm super pumped to be reacting with you on those earnings as well. So make sure you subscribe to this channel, hit that notification bell to get notified when I go live tomorrow afternoon. I am pumped. I cannot wait to cover these earnings with you guys tomorrow. And that's going to do it for me. Again, one more time, if you hit the subscribe button or not, next to the subscribe button, there's a join button. If you hit that join button, you get a watch list from me. Every day of the week, I put out 5 stocks that I think are going to make the moves. Today, we crushed it. Today, we crushed every single stock that I put on the watch list this morning. Did very well. And anybody who's in the chat with me right now can attest to this, that the watch list is always a great value. It's $4.99 a month. You can't beat it. Every morning you get that watch list from me. It's 5 stocks, a fundamental and technical breakdown. You also get access to our Discord group. It's a great community as well. And it's $4.99 a month. You can't beat it. And it just supports the channel. It supports everything you see behind you, the studio, all that good stuff. Would love to have you guys as support. If you want access to that watch list, I would be greatly appreciated. If you don't see the join button next to subscribe, some of you can't. There is a link in the description as well. You can go to ownthechaos.com. We'd love to have you guys there. Thanks so much for tuning in, guys, and I'll see you tomorrow. Bye.